Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my November pick. As always, first I would like to analyze a little about the evolution of the YouTube channel, and how I see it in a couple of months. As you can see, the evolution during this last month has not been so positive since we grew less than I expected in the daily number of visits, and we have experienced a high deceleration in daily new subscribers. Wow! This month we have not reached the goal of reaching 1750 subscribers. So for this month the goal will be the same and will be to reach 1750 subscribers. Do you think we will make it? The evolution of the investment made last month has not been good, as it has been flat in a bullish month, but in overall the portfolio has performed in an excellent way. AVI and Texas Instruments are the worst performers this month with over 7% and 1% decrease, respectively, while Texas Roadhouse, Vici Properties and Comcast are the best performing ones with over 5% upside. The good news is that during this month we have received 3 dividend payments. Specifically €1.09 of Texas Instruments, €1.47 from Starbucks and €1.24 from AVI. That makes a total of €3.80, which continues growing when we compare with last year November month. This month I will add a company that I don't have in my portfolio in order to increase my diversification, and due to the no exposure to the financial sector in this portfolio, I decided to add a new company. That is why this month I am going to compare 4 different companies in the financial sector, such as Bank of America and Morgan Stanley, which are companies that pay lower dividends but with exceptional growth potential, or companies that have higher dividend yields such as Royal Bank of Canada or T.Rowe Price that pays higher dividends but recently slowed down its payments growth rate. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. T.Rowe and RY have a dividend safety above 75 while the other 2 companies have a poor dividend safety around 50. Instead, I consider that all 4 companies have a consistent dividend track record and its payment is secure. Regarding dividend yield, as I mentioned before, 2 of them have a dividend yield below 3 and the other 2 over 3% dividend yield. Looking at dividend growth, only Royal Bank of Canada has not fulfilled my requirements about double-digit dividend growth in the long term. Continuing with the evolution of the revenue and earnings of each company, Morgan Stanley is the only one who has had a more flat evolution, while the other 3 companies had a positive evolution during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, T.Rowe is the only one who managed to obtain a positive free cash flow during the last decade, something that is too difficult in the financial sector as we can see in the other 3 companies. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. In this case, only Royal Bank of Canada has not a clear buyback program while the other 3 companies decreased the amount of shares during the last decade. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. Bank of America and RY are in line with the 5-year average price-to-earnings ratio, while Morgan Stanley above them, indicating an overvaluation of their price, and T.Rowe below them indicating a potential undervaluation. Moving on to yield on cost, here Morgan Stanley and Bank of America are the clear winners with around 10% compound annual growth rate over the last 10 years. While the other 2 companies have less yield on cost, Royal Bank of Canada boosted a 6% compound annual growth rate, and T.Rowe Price a more modest 2.94%. Finally, we will see the total return that each stock has offered during the last 5 years. Here Morgan Stanley is also the clear winner with almost 225% total return, while Royal Bank of Canada's total return is also good, very similar to the financial ETF, XLF. But the other 2 are below 70% in total return in the last 5 years. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, T.Rowe Price has obtained the highest score due to its attractive price-to-earnings, buyback program and current dividend yield that lead Royal Bank of Canada to lose some points. As a result, T.Rowe Price will be our pick of November despite the fact that I will consider the other 3 companies in the near future. Then we enter the Scalable Broker and carry out the operation, looking for the T.Rowe ticker. Remember that I will always try to make a purchase above €100 so that the fee is less than 1%. Putting one share would be an investment of almost €105. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the T.Rowe Price ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €105.01, adding the 99 cents fee. Placing the ticker in the first column, it automatically added the number of shares and the average price per share. We add the financial sector reference in the column, and as you can see we have more than 10% upside. Additionally, this investment will allow us to reinvest 0.04 shares annually via dividends. As we are already in the month of December, I will move on to the monthly value sheet, and in the month of December 2024 we will write the €2,482.83 that our investments are worth in the market. This month the portfolio made an upside of 3.39%, which is slightly below the 3.7% that S&P 500 has obtained in the same time period. So this month we underperformed the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.